Unit 5 Journal. The objective of this unit is to explain what is journal and steps involved in journalizing. First, what is journal? A journal is called a book of prime entry, also called book of original entry, because all business transactions are entered first in this book. The word journal means a daily record. The transactions are recorded in this book in the order in which they occur, that is, they are entered in a chronological order. In this book, both aspects, that is, the receiving aspect and the giving aspect of the transactions are recorded. The process of recording a transaction in the journal is called journalizing. The entries made in the journal are called journal entries. Form of the journal. The journal is provided with 5 columns. Each of these columns is meant for recording a specific detail of the transaction. Column number 1 is used for recording the date of the transaction, that is, the date on which the transaction has occurred. Column number 2 is called a particular column. This column is meant for recording the names of the 2 accounts which are involved in the transaction. This is also used for writing a brief description about the transaction called narration. Column number 3 is known as the LF column, that is ledger folio column. Folio means page number, so it is meant for writing the number of the page in the ledger on which the particular account appears. Column 4 and 5 are called amount columns. Column 4 is called the debit amount column and the column 5 is called the credit amount column. Next concept, steps in journalizing. In recording various business transactions in the journal, the most important aspect is the entry in the particular column. Any mistake in this record would lead to incorrect accounting. Hence, you should analyze the transaction carefully before making such entries. The following steps shall help you to do such analysis. First one, take up the transaction one by one. Read and analyze the transaction carefully from the business entity point of view and identify the 2 accounts that are being affected by the transaction. Second one, you are aware that accounts have been classified as personal, real, and nominal accounts. Hence, after identifying the 2 accounts that are affected by the transaction, you must determine in respect of each account whether it is a personal account or a real account or a nominal account. Third one, each class of account has its own rule of debit and credit, which you have already learned in the previous unit. Now apply the relevant rule and decide which account is to be debited and which is to be credited.